Well, hey there, everyone, and welcome to today's VIP Trade Room with Roger Scott and Matt Horton. My name is Raleigh White, and I'm coming to you live from Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger is going to be covering some critically important things over a range of topics, but the focus today is going to be on seasonality. He's going to be talking about how we can use seasonality to confirm sector strength or weakness. He's going to share how to combine seasonality with technical price action. He's going to give us his theory as to why seasonality works so well on stocks. We're going to be looking at finding commodity-related stocks using seasonality, how to use credit spreads for seasonality, and how that can drive some pretty tasty income. We're also going to look at finding out the best seasonality period for your favorite stock. So he's going to ask you for some of your favorite stocks, and he'll talk to you about the best size seasonality period for those. And he's also going to do a quick review of time spreads and what we're planning on putting into the data miner to increase your odds of success as we look at these critical seasonality opportunities. Now, if you have any questions during Roger's presentation, please type them in the chat window, and we'll address these periodically throughout the session so as to not interfere with Roger's presentation. Now, for those of you that may have not been with us this morning when Roger opened up the market, let me share with you some of the things he saw as he was getting ready for the markets to open today. From an overall theme perspective, he was very pleased to see that the market was up just on a broader investments. He noted that 58% of the companies out there are above their 200 moving average, which is up from about 50% last week, and that discretionary and blue chips all appeared to be in alignment. In other words, everything wasn't being poured into the mega stocks. There's a much broader diversification as more money is moving into the market in a diversified way. Now, as far as his catalysts for today are concerned, well, Roger's got a keen eye on crude oil, not just because they have a report that comes out today, but he also noted that they were dropping below key levels. Secondly, he noted that China large caps were breaking out and the impact that that could have on the market. As relates to sectors, networks were intriguing to him because Palo Alto is up nicely, but on the flip side, restaurant stocks could be taking a hit as Kava was basically selling off and was down significantly. Other things that are catalysts for today to pay attention to or to be aware of is that we've got three Fed governors scheduled to speak today. And the consensus at this point in time is it's 90% plus that there's going to be a September rate increase of at least 0.25%. Some saying 0.5%, and even one individual in the administration felt it should be a full point, which Roger thought was just insane. And then lastly, folks, we can't overlook the fact that tariffs continue to be with us in the background, and we've got these critical talks between Trump and Putin with a focus on Ukraine and other relationships between the United States and Russia, and those talks will be continuing through Friday. As far as Roger's small cap watch list is concerned, the two that he was focused on today were BSLK above 435 and GBIO above 560. And I'm just going to go ahead and copy in those, put those in the chat panel so that you've got those to see and are handy to you. So those were, what he was looking at as far as small caps are concerned. And he also reminded us that with these small caps, his selection process is focused on price action and volume. I mean, that's what drives that opportunity when he sees them in the morning. Because, once again, small caps are not necessarily market dependent. So what the market is doing doesn't have the same impact on these small caps. And lastly, some people are saying, well, Roger, why don't you use the RSI? And the reason is that no institutions are buying small caps. So once again, when Roger selects these, he's looking at those with extreme price action and volume. And once again, you see the two that were on his watch list today, BSLK and GBIO. Other things that I want to share with you, Roger also gave us his list of the short stocks and the long stocks that he has on his watch list. And I'm going to post that for everybody here. And I hope you all appreciate that these selections are made by Roger, before the market opens. And you know that he's got a very structured approach to the way he looks at the markets with catalysts, what's going on in the markets from a broader perspective, and how he narrows things down. And looking at his longs, two things that he noticed is that you'll see that Nvidia and Avgo are on there, and he calls that, I guess what the term is, one serving only. And I guess what he's saying is that when you have NVIDIA and Avgo together, once again, they basically represent the same sector. You shouldn't put all of your money into both of them. He says, pick one or the other, or if you're going to buy 100 shares, put 50 in NVIDIA and 50 in Avgo. In addition to that, he was also very excited today on the opportunities with Schwab and with Goldman Sachs. And that falls into the same category. These are financial companies. And so it's just one serving, folks. Either consider going with Schwab or Goldman Sachs, or splitting the amount of money that you were planning on investing between the two of those. But those were, and I just posted that for everybody. You can see the shorts and the longs. And I know Roger will go over that again, but I fully expect that as he and Matt have been looking at the markets, that watch list has certainly been modified. But this is what we saw this morning, coming in to the market before the markets opened. And I think once again, the overriding thing was that Roger really was pleased to see that there is investment diversification. It's not, the mags are not the only ones getting the attention. As he pointed out, 58% of the companies out there now are above their 200 moving average. That's up from 50% about a week ago. And he just liked the spread and the diversification within the markets. And so, for those reasons, he's kind of buoyed by what he sees there. We do know that we have a pretty critical report that's going to be coming out. A PMI report will be coming out tomorrow, and that has the potential to either, support or basically give a pause to things, because that's one of the bigger inflationary things that we have to keep our eye on. There's some critical earnings that are coming out, for example, Cisco, but that's not happening until after the markets close, so it's not really a catalyst for today, but it could certainly have an impact on tomorrow. But anyway, I just wanted to say hi to everybody that's here. Roger's going to be joining us shortly. Of course, we have Matt here, and I'm glad to be back with you. I took some days off. I'll share with everybody. It was my 50th wedding anniversary, and what I decided to do for my better 9/10, as I refer to her, my wife, she's wonderful. We decided sort of to retrace what
Good
we did
morning,
50
everyone.
years ago.
Good afternoon.
Hey there, Matt. Hey, 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 buddy. And I was just sharing that, this little vacation, we decided to retrace our steps.
Yep.
So we got married up in South Salem, New York. It's very near Connecticut. It's very, very near Greenwich, Connecticut. And so we went back up there. We saw the church where we got married, where we had the reception, the rehearsal dinner, got to see her family. And then we honeymooned on the eastern shore of Maryland in a small town called Whitehaven, went back there, just did all. It was a nostalgia trip and it was fantastic. But anyway, I'm delighted to be back and be with you all, and look forward to an excellent session today. Matt, my man, how are you doing?
I see. Oh, yes. I can't hear him.
You doing good, Matt?
Yep.
All right.
Sorry, Raleigh. I can't hear you. Okay. I'm probably should be able to hear you now.
And thank you once again, everybody, for the well wishes on that.
What do you say?
Pardon? And Roger should be joining us shortly. He's still in hair and makeup. He hates it when I say that.
Roger's coming in right now.
All right. At least he has hair, Matt. I can't say that.
hopefully this market picks up. Gold is strong today. We went long, but just joking around right now.
Hey, Raleigh, welcome back.
Hey, Roger, it's great to be back. Nice to see everybody. Once again, you've got a fabulous room here. The people are so welcoming, and it's just nice to be here. Just to give you a heads up, I just did a little a review over what you're going to cover today. The key theme today is seasonality and all
That's
the
right.
wonderful things you can do with it. And I also gave them a little bit of an update as to what you talked about this morning. You know, the theme that you saw coming in. Obviously, this morning you were going like, I like the fact that there's more diversification in the markets.
Yeah.
And we talked about the catalysts for today that we're sort of keeping an eye on. So I think the table's pretty much set for everybody. And as we all know, things can change from 8 o'clock in the morning to where we are here midday. But are things basically, rolling out the way you expected them today? Any surprises?
Actually, the only surprise I have is how weak one of the stocks I have is, Roblox, but otherwise, not really, no. And I'll show you guys why. Actually, let me share my screen right here.
All right.
Matt, can you make sure Deanna sent out all the emails and everything?
Yep.
Good morning, everybody, by the way. Good morning, good morning, good morning. Let me say hi to everybody on YouTube. And by the way, Raleigh, you'll be happy to know that I was behaving myself and that I kept the questions to a minimum. I was actually pretty busy teaching last few days. Richard, Kevin, SJ, Just Jen, Maggie, Robert, Keith, good morning. Good morning or good afternoon, depending on where you're at. And let me just quickly say hello to everybody here. We got Christopher, Sylvia. We got a lot of people here as well. We got John. We got Peanut. We got Becky, Cyrus. We got Marlo, Sergey, Matt, Andrew, Mike, Ivano, Brendan, Peter, Raj, David, Jeanette, SB, David, Abe, Sylvia, Rod, Chris, Terry, Alan, iPad, Jeremy, Wesley, Claude, and all the others that I just kind of scrolled really quickly through. So let me really quickly show you a few things here that are bothering me. Well, that are red flags. First thing is you could see right here we're moving. The S&P 500 is now getting close to that 1.5 standard deviation level. And usually when we get to that level, we tend to back away and come back to the 8-day EMA. So we're kind of getting uppity. Now, it doesn't mean this is not a 5-minute chart. It doesn't mean it's going to happen this second. But what it's telling me is that we're starting to get a little bit out of whack in terms of the mean, in terms of the short-term mean. We should be closer to here, okay? And we've been below the VWAP predominantly most of the day right now. So this is not great. Another thing and this is not really bothering me, it's more of just an observation, is that notice the RSP, the equal weighted SPY, that's where the money is today. It's not in the mega caps. And I said that this morning. If you were on my morning broadcast, I said that I believe money's going to start shifting more and more into the broad market, and that's what we're seeing right here. The only question is, how is the QQQE looking? I haven't even looked at that, to be honest with you, today. Let's take a look. Yeah, it's got great relative strength. Yeah. So we could see that the money's not in the mega caps today, and not necessarily, these are not necessarily smaller. When I say smaller stocks, money is moving into, let me show you, money is moving into smaller stocks like IWM, Russell 2000, but that's not what I was really talking about this morning. What I was talking about was smaller S&P stocks. So what we were talking about was right here. Hey, Bill, how are you? Hey, Ken, good to see you. It's been a while. Hope you are well. I know you sent me an email. I hope everything worked out okay. So let me show. IWM is just smoking. It's cooking with gas. This thing is good. The problem is you got a resistance rate. We can overcome that area. We can really draw a couple of lines here. We can overcome this area right here. We can really move, but we got to get above. We got to get above this area that we're at right now. But there's still some room here. There's definitely still some room here. But But we got to see some more upside here in this asset. Let me just move this here. You got a little room here. Once we get past that, we got here, and then we could see a clean slate. But the stocks that I'm talking about are just the regular S&P 500 stocks, not the mega caps. Because there's like those mega caps are now responsible, the Nvidia, the Teslas, they're now responsible for 40%, 40% of the S&P 500, 40%. So take a look at this, Raleigh. This is what I was talking about this morning, and I said I hope to see follow through.
Right.
And we're seeing it. It's working out exactly as we discussed. We're breaking out of this box, and here QQQE.
Yeah,
Yeah,
we wanted to see the QQE, would they follow? Yeah.
they're moving. So we're starting to see investors not just fall over themselves, not just falling all over themselves on those mega caps, but we're actually we actually are seeing the other stocks participating. Venkat said, I thought you mentioned yesterday that institutions were heavily short IWM, biggest in history. But that's usually a contrary signal. It's like the put to call ratio. When it goes one way or another, that's when the opposite happens. I'm just showing you facts. I'm not telling you what I thought about it. I was just showing you facts. Big divergence. It looks like we're having a squeeze. Yes. Anyway, so the question now is this going to happen, and how long it's going to last, and how persistent it will be? Because if the SPY really turns down and starts coming down, now this is nothing. This is just coming down to the 8-day EMA. But just be mindful that the large caps are starting to get slightly overextended. Let me look at the QQQ here. Well, look at that. I mean, we're getting towards that area here. We haven't penetrated, but we're getting up there. But this has to fill. Now, it's not a lot. We're talking about a day or two, but this has to fill. But what I really like is, again, the fact that we're seeing the regular S&P stocks participate, which means institutions are feeling a little warm and fuzzier about the whole thing. Now, before we get into the seasonality, I just wanted to bring up two things. This morning, Omar on YouTube says, thank you for the small cap trades. I'm traveling, $700, first time placing them. You're welcome, Omar. Would you grab that, Matt? Or
Yep.
That's on YouTube. Now, let me just show you what we were doing, just XYI. So I told you about this stock. I told you to buy it at 435 today. We set an alert. We got an alert right here. Let's see. About 10 something in the morning, 10:15, 10:10 came right here. And then it went from 435 all the way to $8.94. So you would have made about 90% on your money on that stock. Just FYI. And I know a lot of you took it because I got a lot of thank you emails. And the other one was GBIO. And I told folks to buy GBIO at $5.60. I dare anybody here to say I didn't say that, because I did. The stock opened up at 5. It got clipped real quick right here. And as the day progresses, it's now at 643, and it's still moving higher. Although volume is cooling off. It may have another day in it. I would still hold this. I would use the 8-day EMA or maybe the VWAP to trail it. Okay. Yeah, there you are, Raleigh. Yeah. Yeah, 435. So one stock almost doubled, and the other stock is up about, 30%. Pretty good with these small cap stocks. Don says, took it, thanks. So if you guys took those stocks, post it in the chat. I'm assuming, and Raleigh, yesterday we gave this one. You missed this one. We gave ATNF. Look at this one.
What did it do?
You got to see this, ATNF. So guess what the entry was? $6.75.
Oh, gee.
$17.35.
Holy smoke.
Dear.
Love it. Love it.
Glory
Love
to
it.
God. Yeah. Anyways,
Yeah,
so
and Rob's going like, when do you give out these trades? Rob, you got to come in the morning. You
yeah,
got
it
to
also
show up in the morning. And during Roger's session, 8 o'clock in the morning, he leads off with small caps.
They're all in the morning show. I gave you the exact levels. Nathan says, love the small caps. Yeah, it doesn't take me very long to find them. And I'm not managing them for you, so I don't have to really pay attention during the day because I'm just giving you the entry. So until I have to start managing them, which I don't right now, I'm just going to keep giving them to you. It doesn't cost me anything. And I give them in the beginning of the show so that you guys are there in the beginning of the show. And then I give the large caps at the end of the show. So you get a reward for being there in the morning. Okay. Chris said 25% and 8%. And folks, this isn't on the options. This is on the underlying. This is the actual underlying. Paul says 3 times his money on ATNF. All right, good. Well, listen, I know how to pick stocks. I know how to pick large cap stocks, and I know how to pick small cap stocks. The thing is, small cap stocks is entirely a different world. You don't have to worry about what institutions are doing. You don't have to worry about what the S&P is doing. You don't have to compare them to the S&P. You just have to know which stocks to pick, and you have to make sure that they have extremely high volume pre-opening. That's the secret sauce, like 1,000 times higher volume. Okay, short call on the Kava closed out, pulled $2,000. Excellent, Keith. That's what I'm talking about. Now, if you are in the pit, and I'll talk about this trade because I like to talk about losing trades too, real quick, and then we'll get into the session. So we haven't had a loser in the pit, and I'll be honest with you, I don't remember how long it's been since we've had a loser in the pit. I think it was since February or March. Home Depot, right? Home Depot and D-Dog, and I think there was one more. But I'm talking about for the whole. Oh, Lulu was. Thank you, Lulu was the last one. I'm literally going back since January. Okay, so we had a couple. I just want to let you know how this is playing out. Okay, don't get into this trade right now. This is not a look how good I am kind of a trade. This is look at I think this is our 4th loser this year. I'm not joking. I think this may be our 4th loser this year. I'm not kidding either. But you see how it's penetrating the 15-day EMA right here? So if after 3:30, between 3:30 and 4 o'clock, it's still below the 15-day EMA, done. Curtains. All right, curtains. So I'm just giving you heads up. If you are in Roblox, I do not like how it's looking right now. And I don't care if it's going to go back up or it doesn't matter. It's below the 15-day EMA. If it closes below the 15-day EMA, we're not going to know till obviously the last half hour of the day. If it starts coming up real aggressively, it's good. Now, what's the silver lining here? Volume is really low. Volume is really low on this downside move, like really, really, really low. So there's a really good chance it could come back up and close above the 15-day EMA. But I'm just letting you know exactly what I'm looking for, okay? All right, now, without further ado, let's talk about seasonality. Now, what are the different kind of seasonalities? Can anybody tell me? Yes, there's not one kind of seasonality, but there's multiple kind of seasonalities. Can anybody tell me? Seasonality and earnings are not, no. Can anybody tell me? We got 53 people here on in YouTube, and we've got, let's see how many we've got, 470. Why is it so light? Is somebody teaching today? Is somebody doing something today? What's happening here? Why is the room so light? Can you check, Matt, to see what's happening? Can you do some forensic investigating?
Yep.
Thank you, sir. Are you still in that trade?
Yep.
You are?
Yep.
Okay. All right. Just asking. Let me see something here. Oh, I see what the problem is. I'm looking at the QQQ and you're in the SPY. That's what the problem is. Okay. Now I understand. We're looking at two different things. Okay. So what type of seasonality are there? There's two kinds of seasonality. Jeff and Jack have a class. Oh boy. All right. It is what it is. So there's two kind of seasonalities. Can anybody tell me? No, that's not it. Okay, I'll give you the type of seasonalities is, okay? There's commoditized seasonality, commoditized. Um, Time of year, natural events, like orange juice, hurricane season, commoditized seasonality. And then there's, as Jay properly said, um, I don't call it consumer seasonality. But you are correct. I call it group seasonality. Group seasonality. So you're absolutely right, SJ. But it's a little bit beyond consumer. But you're definitely in the right neighborhood. So it's there's two kinds of seasonalities in there, right? One is basically nature. Nature versus nurture. That's a good way to think of it like that, okay? One seasonality is just created by people doing the same thing at the same time. And another seasonality is literally based on weather, time of year, things that are not controlled by people, okay? Okay. Now, so don't think there's just seasonality is seasonality. Two different type of seasonality, okay? And earnings are not seasonality. And earnings are not seasonalities. And also, what we're talking about right now has absolutely zero impact on small cap stocks. Okay, I don't mean to be the party pooper, but I'm just telling you the truth. This is all S&P type of large cap stocks. That's my forte, large S&P 500 stocks. Because the reason for that is because I have institutional experience. Now, I know exactly what makes small tick stocks move, but it's nothing. 99% of the stuff that I teach you doesn't move small caps. So this is not about small caps. Event driven, exactly, Kent. Event driven versus just unforeseeable events. And again, orange juice is a great example. Or people buying people buying snow clothes in the winter, and people buying pool equipment and pool chlorine in the summer, right? That's just it is what it is. It's not because a bunch of people buy it, it's moving to seasonality. It's because something happens during that time of year. People go swimming in the pool. People like to pool needs chlorine. People buy chlorine. They don't buy chlorine in January unless they live in Hawaii. Or Miami, right? They buy chlorine in the summer. Flowers, exactly. You guys get it. Nature versus nurture, okay? A lot of people for some reason said earnings, but earnings are not it. Earnings and seasonality have nothing to do with one another, okay? They kind of seasonality kind of intervenes and doesn't really think about earnings. It just does its thing. So it doesn't matter now. One is not more powerful than another, okay? Which means if you have a bunch of traders making a trade during a specific time versus orange juice going up around September because of hurricanes. And I think it's September. Matt, is it September or is it August? September, right? Hurricane season, September.
August.
August? Okay.
August,
okay.
yeah, we're into
August.
it now. Yep.
We're in. Okay. So I know that it's somewhere in that ballpark. Anyway. Sure, we got wind and rain every day here in the afternoon now. It's typical Jacksonville weather. Anyhow, I digress. So don't think one is stronger than the other. It's not. It's just it's either there or not. And don't think thinking of what caused it is beneficial to see consistency. But trying to figure out what caused it won't. Now I have an interesting theory, and now, most of the things, 90% of the things that I talk about, I can easily prove and show you guys. This is something I can't really show you or prove to you because this is not really tangible. But I have a theory, and this theory is very grounded. And the theory is money has been the market's been getting more expensive, right? Dow is much higher than it was, say, 10 years ago, okay? So more and more money, that money's coming in from institutions and hedge funds, okay? And back in the day, you may or may not remember this. Most of you guys are old enough to remember it. Some of you don't remember it. But you may or may not remember there was a time where the admin in your office building would come to you, assuming you work for like a big company like IBM or Hewlett Packard, whatever. And they would say, okay, where do you want to put your money this week? And they would say, okay, it'll happen on Friday. Just fill this form out. And that money went into a pool. And they would rotate that money every time during that specific time. I think one of the reasons seasonality happens, yesterday we talked about seasonality happening Monday, stock market getting weaker on Friday and Monday, and then getting stronger Monday afternoon and finally jumping up. Well, when we talked about that, when we were discussing that, that's a man-made seasonality. That's something that has nothing to do with weather or anything like that. That's just a bunch of people doing the same thing over and over and over, repositioning their accounts on Monday when this money's coming in, the reaction from money coming into the pool on Fridays. So seasonality is part of that cycle, that Friday to Monday lull, and then market going higher. It's seasonality. That is seasonality. Very important seasonality. A seasonality that we actually utilize all the time. Now, why do I think there's so the answer is, I think people take the path of least resistance in anything they do in life, okay? And I believe that when you have a corporation and you can put money in, I've talked to a lot of money managers that manage billions of dollars. They don't care what the market's doing. What they want to make sure is that they don't distort the market. They don't distort the market. So they put in shares at the same, slowly trickle in shares. Well, somebody has to offset those shares. And if somebody doesn't offset those shares, they're going to be bidding or offering much, much longer, like much, much longer. And if that happens, other institutions are going to start understanding their order flow. So a lot of times what they do is they'll get together with their buddy hedge fund manager and they'll say, hey, you know what? I'm going to be liquidating X amount of GE at this time. And the guy will say, oh, okay, that's cool to know. Thanks for that information. So they know the market makers know each other really well. Some of them are best friends. So when you have these large pools doing things, sometimes one will be offsetting to another, and money will be just exchanging hands. And that's the best way to avoid liquidity, okay? The point is, all of these things will ultimately impact the market, and they impact the market at the same time. So what this has done, it's created seasonality for multiple assets within the same sector. And that's what I really, really love, and that's what I look at. So let's say, hypothetically speaking, and I'm just hypothetically throwing dates. In about 20 minutes, I'm going to be giving you real seasonality dates. So you should really this is a session you want to take a piece of paper and a pen to. So what you will find is, and sometimes Matt and I will find is that when we look at we have our software has the ability to look at a 5-day window, a 5-day seasonality window, okay? And a 10-day seasonality window. Basically, what's the next 10 trading days will be? What's 1 week versus 2 weeks of trading data give us for this stock? And oftentimes, we will find that the exact same stocks are moving. Folks, that is gold right there. Because think about this. If I'm going to make this up, I'm just making this up. Let's just say, hypothetically speaking, that semiconductors move up in November, okay? For whatever reason. Semiconductors, not Intel, but AVGO, Intel, NVIDIA, AMD, Micron, and they're like and they do it 80% of the time. Okay, 80% of the time. Let's say they do that. Okay. Well, if they do that 80% of the time, guess what you have? You have a man-made seasonality. The thing about it is, they know Micron, the folks trading Micron see that in the sister stocks. So they see that there's liquidity. Liquidity is higher. Higher liquidity means easier to unload your shares. See, you and I, we're looking for moments where they don't have enough liquidity to offset their shares. That's the momentum. That's what we're looking at. They're looking for the opposite. They don't want us to have any momentum. They want the momentum to be, they want as little momentum as possible. Unless you're Elon Musk 6 months ago or 4 months ago. I guess he thrived on momentum, but that's not here nor there. But most companies, they don't want the momentum. Why do they not want the momentum? Because the more volatility a stock has, the less 401k, the less institutional safe money will be buying those stocks. The less safe money buys specific type of stocks, the less liquidity those stocks have. Now, let me ask you an interesting question. If you're a company, if you're a stock company, do you want Warren Buffett to come and buy your stock for months on end, or do you want that group of guys who was buying GameStop to come in and buy your stock? I think we all know the answer to that question. So in order to attract good money, clean money, not dangerous money, not speculative money, money that's not going to come and go, come and go, come and go. Basically, guys like us, you need to have very steady price in the stock. You can't have the price of the stock zigzagging. And when you don't have liquidity, that's what you get. So the moral of the story is that liquidity is very much tied to seasonality. And because institutions have been dominating stocks for 30 years now, 20, 30 years now, not longer than that, about 20, 30 years, you have very strong seasonal trends that last a week and 2 week in stocks. Very, very important. And when you can find 3, 4, 5 stocks doing something seasonally, it's very, very important. Number 2, and this is something that a lot of folks get really confused here. Seasonality is not a short-term thing. It's not like, oh, the wind is now blowing. Oh, the wind is not blowing. That it doesn't work that way. Okay, that's just random nonsense. You don't want to take a seasonal period seriously unless it lasts 5 to 10 days. 5 to 10 days. That's a real seasonal period. That you have some non-randomness there. If 3 auto stocks all rally beyond random over a 3-day period, over a 3-week period, 80% of the time in January, hypothetically speaking, that's an edge right there. That's an edge. So it's kind of like, when you go out on Saturday night and you live in a big city. I live in a village, but you go into a big city, you go to Main Street or you go to Hollywood Boulevard in LA or Sunset Boulevard in LA, and you see everything is lit up, all the bars are open. It's kind of odd when only one bar is open and everything else is closed, right? That's the one you don't go into, right? Unless you're really looking for an adventure. So my point here is that you want to see these 5-day periods on multiple stocks. Now, one more thing that I want to teach you, and then so far, are you guys getting this? Is this all? I'm not getting weird questions or anything like this. Is this being helpful to you guys?
Yeah, absolutely, Roger. I mean, once again, because seasonality is something that, the concept is elusive. And what you're doing is you're just building some really solid foundation around it.
Yes, absolutely, absolutely. So now that I'm talking about seasonality, remember when I say that the most dangerous thing is not what you don't know, but knowing just little enough to be dangerous?
Yeah.
So
Yes.
let me continue. It is. They've done studies. And I'm telling you, it's not the people the people who are like, God, I don't know this. They do fine. It's the people who are like, yeah, I think I got enough to, yeah, I think I can, oh boy. Woo. That's the ones you got to watch out for. All right. Bar analogies. Yeah, you like my bar analogies. Good, Greg. So you're probably sitting here going, hey man, seasonality, this is great. And Roger's going to talk about a tool. He's going to give me like 40 seasonal. I'm going to give you real seasonality dates shortly. But before we get there, seasonality is a wonderful thing. The problem is, how can I explain it to you? It's like weather. You can't contain it. You can't put it in a cup and savor it. It doesn't work that way. It's wild. Seasonality on its own is very, very dangerous. Usually it'll lead you into trouble. Don't ever, 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 and I really mean this. Matt and I tried this. We tried this about 4 years ago, Matt. 3.5?
Three and a half, yeah.
3.5 years ago. I'll go into bars in my stories too, Matt, Greg. Don't worry. So we really started getting into seasonality, and when you get into something, you start getting really deep. And Matt and I started like, okay, today this stock is seasonally strong. Tomorrow that stock is seasonally strong. And obviously we didn't do this to you guys. We did this to ourselves, and it wasn't working. It was nonsense. It was complete nonsense. So I'm going to tell you the things not to do with seasonality. If you're using seasonality, the last thing you want to do is rely on day-to-day seasonality. Oh, today the stock is supposed to be strong. No. That's nonsense. 5 to 10-day windows. And our software has a magic button that gives you 5-day windows and 10-day windows for the top 5 stocks of the day, every single day. So you don't have to search for this. The reason I did that is because that's what we use. So if it's what I would use, I would want you to use it too. But that's just a starting point. So seasonality alone, okay, is like me going to the store. You gave me $100 to go buy some goodies in the supermarket because we got a hot date tonight, and you want to impress your date. And I came back and I bought you $45 worth of sugar and $45 worth of salt and $5 worth of pepper. And you're looking at me like, the hell are we going to do with all of this? That's what seasonality alone is like. Okay? Now, seasonality is like wind for a sailboat. You have amazing sailboat, like those, I don't even know what they cost, probably $750,000, the ones I'm thinking. I'm not a boater. I'm not into any of that stuff at all. I don't even love going on boats. I'm a land person. I'm a land baron kind of a guy. I'm not a boater, and I've always grew up around the ocean, and I've always gone on boats. I just never wanted to. I've never wanted to buy my own boat. I had a house that came with a dock when I lived in LA in Lake Arrowhead, and I let my uncle park his boat there. I never even got my own boat. I'm just not a boater. I think it has to do with maintenance, and I don't like to maintain anything. I'm just not. I like to trade. I like to keep my hands clean. So I'm not a boat guy. But seasonality is like you going on a boat. You spent $750,000. You invited your best friend. You got your mother-in-law there. You want to make a good impression, and there's no wind. What are you going to do? Nothing. But imagine you have an amazing boat. You know how to ride it, and you have the wind. You're going to have a great afternoon, right? So I don't even know, Naples fan, what a good sailboat costs. I have no concept. I honestly don't know. I remember when I was in 5th grade, which was like 100 years ago, my teacher said good boats are $1,000 a foot. So I was like, oh, okay. So now that number must be like $10,000 a foot. I don't know. Are you a boater, Raleigh?
No, I can tell you this. I have experience because my father attempted to be, and we came to the conclusion that a boat is a hole in the water you throw money into. And,
yeah, so funny that you mentioned that. I didn't even think about that. A friend of mine bought a boat here after Jack's, took me a few times. I asked him a few months later, like, how's it going with the boat? He's like, you know what? The amount of money I was putting into gas for the engine, it's cheaper for me to go rent a boat, and I don't have to pay storage fees. So again, I know there's hundreds of thousands of millions of people who love boats. I'm just talking about my personal experience. Please don't let me sour you on the whole boat thing. It's expensive. That's all. It's expensive. $3 million plus for a nice catamaran. Okay, well there you go. Imagine spending $3 million plus and not having any wind. So the example that I always give, and this example seems to work really well. I don't even know how I came up with it, but Bloody Marys. Try drinking a Bloody Mary without like salt and pepper, and take the cold away from it, and it's going to taste horrible. It's the same thing with seasonality. It goes together. It goes together with you got to combine it with technicals. Okay,
Hmm.
what technicals work really good with seasonality? So let's talk about that. Not pullbacks, not pullbacks. Okay, grinders, grinders, stocks that are just kind of doing this, not breakouts, not deep pullbacks, but grinders, stocks that are down for a couple of days or a day or so, but are still continuously holding above the 8-day moving average. Those go together really, really well. Really, really well. How do you find those stocks? I'm going to talk about, I give you a list every day of those stocks. What kind of trades can you do? You could buy regular options 3 to 5 weeks out, or you could do debit spreads. Now, yesterday, I was very, very nice, and I gave you a list of stocks, and I gave you a list of debit spreads for them, short-term debit spreads. What I'm trying to do, Raleigh, I think you might have missed it because you were. By the way, how was your vacation? How was your?
Oh, it was absolutely amazing, Roger. Let's put it this way. It exceeded everything that I hoped it would be. Let me
That's
put it that
that's
way. And it was
that's
wonderful. And the nice thing
perfect.
is that it was the perfect length, and I'm glad to be back with everybody here today. So it's very smooth.
Excellent, and it's great to have you back. So the best type of indicators for trading seasonality is exactly what I show you guys all the time. Stocks that are making directional moves, like making 50-day, 90-day,
Hmm.
52-week highs, 1-year highs, but not overextended. Basically, still in that slow consolidation grove. The best thing to do is wait for those stocks to have a day or two of a down move, just softly touch the 8-day EMA or come near the 8-day EMA, come back up a little bit like this, and then come right back up right back up into it. As a matter of fact, let me see. There was one I had in mind. So right here, the this type of move right here. This type of move right here
Okay,
to
yeah.
in this case, it's going to the 15. But that kind of move where it's moving in a very nice trend, but it's not getting like this. It's not getting too far from the 8-day EMA. And it comes back here, it touches the 8 or the 15, and then it just comes right back up. Okay. Those are the best type of moves. This is too far. I would wait for this may be it, but it needs to now trade back above the 8-day EMA. So far, it's looking fantastic, but it's got to trade above the 8-day EMA. It's got to trade above the 8-day EMA. And I don't know if it's a seasonal pattern right now or not. Now, I'm going to Matt. Can you usher folks into? Can you usher folks into from the Zoom room? Excuse me. Can you usher folks from YouTube into the Zoom room,
Yep.
please? Peter, very similar to A lines. A line combined with stealth surges. That's kind of what. That's really what it is, in a nutshell. So let me just grab something here. I wanted to show you something. To give you my list of stocks for today. Just grab.
You looking for the longs or the shorts or both of those,
No,
Raj?
no, no. I got them both. I just wanted to get I wanted to get the deck up before I went over them, just so they could load
Okay.
up a little bit. That's all. I'm good. Thank you. Thank you for that. So, folks, I'm going to give you some stocks right now. Okay, I'm going to give you some stocks. Uh, let's start with the short side. Now, what I'm going to do is I'm going to give you, because we've been talking about short dated debit spreads. So I'm going to give you short dated debit spreads for a couple of these stocks, so you have something to play with. Okay. So Raleigh, as I was mentioning before, while you weren't here, we talked a lot about short-term debit spreads using
Okay.
all of our strategies, but combining them with short-term debit spreads. Because let me show you why. So let's just say we wanted to buy Dollar Tree. And not a great example because it's not that expensive, but we'll do it anyway. Let's say you wanted to buy a Dollar Tree option. And what do I usually go? 3-4 weeks out. So let's just say 37 days out or 30 days out right here. So right here, 30 days out. Here's your delta closest to 70. It's 7 right here. The option would cost you between $700 and $800, right?
Okay. Yep.
But you can go. Not this is it's got to be between 4 and 7 days. So we're somewhere now over here. In this world here, you would buy the 0.50 delta, and you would sell 1 strike or 2 strike. You want to make sure you're at 50% of the spread. And in this case, we're exactly 50 cents. So you can buy this for 50 cents. You don't have to spend $700-800, and you can make 50% return on your money because you spent 50 cents. You actually spend a little less than 50 cents, probably 45, and your profit potential is $1. So you got 55-cent profit. If you want, you could spend 90 cents, and you have $2 profit potential. So you have over 100% profit potential going between what. So what I've been telling folks is that if you don't want to spend, say, $700 on a 30-day call option, you can buy one of these combos, one of these debit spreads that I'm giving you, regardless of what program you trade, and with me, and you can do it for pennies on the dollar. This would only cost you $90 right here. Okay. And if it doesn't work, well, you lose $90. You didn't lose $800, right?
Right.
You could put another one on and just keep rolling them over. So a lot of folks were like, hey, this is really cool. So I'm showing some examples with this, okay?
No, it's
I just
great.
wanted to kind of bring you into the loop because you were out this week.
I was out. I was
Yeah,
gallivanting.
you were out. Sure, you were doing what you were supposed to be doing. All right. So in this case right here, we got 9 days till expiration. We're going to go on puts. I like the stock. I'm doing my short side first. TTD is a short stock. There's only 3 short stocks today. So we would go to a 0.50 delta right here. 54. I don't like to go 50 cents. It's not really enough, but $1's fine. So let's see, $1.87, $1.59. That's less than 50 cents. That's like 60, it's like 29 cents. 29 cents, and your profit is 70 cents. So you've got a over 100% return here. And you just spend 30 cents. Now, just for shits and giggles, excuse my French, let's say we wanted to go 30 days out and we wanted to go out to a 0.70 delta. Let's see what it would cost us. Let's just say 660. I don't want to scroll anymore, okay?
Right.
0.67, not even 0.70, $15. So do you want to spend $1,500 or do you like to spend $30?
Yeah.
Or at least
That's
have a
just buying
choice.
a call, right? Versus
This is
spread.
a put, a put.
Okay, put.
So you're buying a put. You're just buying a put going out 30 days, which is what we would do for $1,500. Versus here, you're just going to you're doing what I was teaching people all week. You're going the closest to 0.50, and then you're finding one with a good ratio between what you're paying versus what you're getting. And in this case, as we talked, it's 3-to-1. It's very good because you got $1 minus 25 cents here or something like that. Yeah, 25 cents right now. That's 75%. You're risking 25 cents to make 75 cents. So it's $250 or $25 to make. So it's very, very cheap. So again, I just wanted to kind of show you one example. Let me do another one. SFM. This is another short that I like. So let's go to puts again. Let's go 9 days out. This doesn't have it. We can't do it on this because it doesn't have weekly options. So what is the second? Are you biting? We're both buying and selling, Carla. We're doing both. We're doing a debit spread. Yeah, I'm going to repeat another one. So let's find another one. Let's find another one that works. BJ's, okay? Now, well, those are all my 3 short stocks. The only one I like is TTD. The other 2 I don't like. So now let's move to the long side. I'll find you some on the long side. Yeah, I'm buying a put and I'm selling a put, okay? So let's, for example, AMD, okay? Let's now go to calls, okay? So let's say I told you to buy AMD right now, okay? let's say seasonality was good on AMD right now. You'd go 30 days out, you'd go delta point 70 right here, or either right here. So you'd spend $1,500 on the option. Or you can go 9 days out, you can go and buy the 185, sell the 187.50. Your profit potential is $2.50 minus the spread cost. What's the spread cost? It's $1. Let's just say it's $1, okay? It's $1. 4.8, 5.10, it's $1. So
Yep.
you're take $1 away from 225. You still have $2.50. You still have $1.50 profit. So your profit potential is 150%. How much did you spend? $1. Not bad. You can afford to let it expire and you can buy another one next week. Same thing. It'll cost you $1. Not bad, right? Instead of $1,500. So don't come crying to Uncle Roger and say, I have a small account. Let's do another one. And I like AMD right now, by the way. How about another one I really like? This one. I'm just giving you two that I really like. I like this one a lot right now. It's an A-line. It's a perfect A-line. So let's say let's say I gave it to you in one of our programs, hypothetically speaking. 0.74 delta, closest to 0.70, right? It's not 6.2, it's 0.74. You'd pay about 2.25, according to this, right? 2.25. So now let's say you go 9 days out, you go right here, 0.5, 50 cents and, sorry, we're going this way. 50 cents and 30 cents. You're spending 30 cents and your profit potential is 70 cents. Not bad. Instead of $2.20 something cents or whatever, you're spending 30 cents. So I really like these stocks. Now, get a piece of paper out right now. And Matt, give them another 10 minutes in the YouTube because I'm not pitching anything for a little while. But what I'm going to do is I'm going to give you a class right now. This is a formal class in the software that allows you to find these seasonality dates on demand like this with a click of a button, and on a daily basis give you the strongest and the weakest seasonality for the next 5 days and 10 days. I am also yesterday, now listen and listen good. Listen and listen good. And I mean it. Listen and listen good. I am planning on adding an additional function into this. That function will help you do time spreads as well. That function will tell you how many times since the stock came out, how many times the implied volatility that was priced into the option was higher or lower than the earnings. Okay? So basically, how often the stock had a volatility crush after earnings. That's going to be the next thing I'm putting in here. Meanwhile, for the next half an hour, I'm going to give you guys a ton of seasonal dates. These seasonal dates are from my program. So whether you buy the program or not, write down these seasonal dates. They're going to be really, really cool. And I'm going to be giving them to you for free for the next half an hour, okay? So take a piece of paper. This stuff is worth its weight in gold. We use these seasonal periods all the time, okay? And Matt, give them another 10, 15 minutes and then usher them into the Zoom room, okay? All right, folks, profits performance are not typical. I'm not going to give you, you may lose money. I'm not going to make any guarantees. This is a software. This is a software that I created. No, I didn't create it. Matt created it. I designed it mentally because I needed it, because I needed a way to quickly to find seasonal periods for stocks in the short term for 5-10 days. And I wanted to do it on demand. And this program does it for me. It was so effective and so cool that folks asked us to market it because they really wanted to have the same edge. So now that we do that. So please pay attention because I'm going to give you a lot of goodies for free right now. This is where you get your seasonality windows right now for free. Pay attention. Now, folks, you will have losing trades. There's no black box miracle system that prints out winning trades automatically. If you're looking for something like that, you're going to be looking for a very long time. As a matter of fact, you're never going to stop looking because it doesn't exist, okay? Our purpose is to give you something that gives you as much of an edge as possible. Okay. If you can't handle losing trades, or if you can't comprehend that you're going to have losing trades, then start slow. Trade with one share, paper trade. Start real slow. I need to tell you this is important. My name is Roger Scott. Look at that guy over there. He looks very happy. And I want to thank you for being here. In a moment, I'll share with you my top seasonality stocks to buy and hold for the next 10 days. Stocks with wealth windows hitting as soon as this week. But before I share those stock picks with you, 100% free of charge, let me show you how our seasonality software finds opportunities just like it. Take a look at this sheet. This is how it all started. We started with this sheet. See these green periods that are all green and these red periods that are all red that last several days? That's a red seasonal period. That's a red seasonal period. That's a green seasonal period. That's a green seasonal period. Has to be 5 days or more. Otherwise, I don't pay attention. What you're looking for or at is the exact return each day of the year for Netflix over the last 2 decades. And all you're seeing is whether it was positive or negative and how much positive or negative. That's all this is. Now, at first glance, it looks like a lot of data to process, okay? But by skimming for big green wealth windows like you see right here, we can isolate the most bullish dates to buy Netflix each and every year. And we can do it over and over and over again, okay? For example, take a look at January 21st through January 27th. Had someone placed a trade during those days of the year, you could have seen Netflix right there. And anybody trading the options could have bagged 133% return in 4 days. Those are actual dates that I'm giving you. These are real dates that I'm giving you. These are not some imaginary dates. These are real seasonality periods for Netflix. And if I were you, I would be writing them down. Okay? Netflix, look at that, 58% in 6 days. There's something going on with Netflix between March 14th and March 20th. How about May 8th through May 12th? Another seasonality period. How about June 26th through June 30th? That's a seasonality period right there, 157%. You see, while most folks insist on making their life very, very difficult, we wait to get tailwind from seasonality periods, meaning there's a legitimate shot to target double or even triple-digit gains during those exact dates year after year. Like, look at what happened with NVIDIA, February 7th through February 14th. Now, at first time, the stock was grinding higher, up 15% in just over a week. But then China released DeepSeek. Remember that it was such a big deal with that whole DeepSeek.
DeepSeek,
right?
yep.
DeepSeek. Yep. I remember it like it was yesterday. And this news sent NVIDIA crashing overnight 24%. Most investors probably thought NVIDIA's incredible run was over at that point. But despite the bad news, my system signaled NVIDIA was likely headed even higher. And that's because NVIDIA entered a wealth window on February 7th, meaning the stock was primed for an exclusive move between February 7th and February 14th. You should write that down. I'd be writing that down if I were you. And sure enough, what happened when February 7th came around? Boom is what happened. 106% gain from February 7th through February 14th, which happens to be a very strong period for NVIDIA. Another